Joining us now with more on the tech rally and her top picks, Joanne Feeney. She's the portfolio manager at Advisors Capital Management. Joanne, let's start off with Nvidia as it approaches a $2.8 trillion market value. Has it gotten ahead of itself?
Yeah, I don't think so, David. I mean, it's always the case that, a stock's price will build in its future, right? And its future growth prospects are really quite impressive. But to put it in perspective, notice that Nvidia's earnings over the last year have gone up 460%. Its stock has gone up 250%, but earnings, are leading the way. And so actually the multiples come down in the last year. Nevertheless, right, the stock continues to rise on expectations that its growth will be more long lasting than for many other companies in the market that investors can own. So that's why the stock is where it is, and we do see an awful lot of growth ahead of it. Competition is coming, but it's going to take some years for that competition to make inroads.
Although Nvidia stock has seen some amazing runs lately, up more than 170% over the past year, many analysts remain bullish, and some even say that Nvidia still has more room to run. From CNBC's Jim Cramer to Mizuho's Jordan Klein and Stacy Rasgon, the Bernstein chip analyst, many more remain bullish on Nvidia, but then again, who can blame them? Nvidia stock is up about 20% since the company reported earnings, and these analysts believe that the only way for Nvidia stock to go is up. But is that really true? In today's video, we're going to answer this question by walking you through some analysts' opinions on Nvidia, and we'll also talk about whether Nvidia stock is a buy even after it crossed $1,000. But before we do that, if you want to keep up with Nvidia's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates. Now, back to today's video.
Own Nvidia. Don't trade it. That's been my mantra for ages now, and it's one of the best calls of my lifetime. After this magnificent run to just under 1,140, up another 7% today, well, maybe you got to start wondering, is it just luck? Did my travel trust simply get caught up in some sort of crazy maelstrom? After a day when Nvidia really did define the trading, Dow declining 217 points, S&P inched up 0.02%, tech-laden NASDAQ gained 0.59%. It's worth looking at Nvidia and asking, is it too much? Or as the bears would put it, enough already! Now, there are at least two schools of thought about Nvidia. There's one of the rigor, one of my favorite analysts in the stock, that's Ben Reichs from Analyst Research, who put out a piece this morning titled, Nvidia shares still pack a lot of value, end quote. And then there's the momentum analysis from Dan Fitzpatrick, a technician who nailed Nvidia better than most. Of course, given how long we've owned this one for the Travel Trust, I have my own opinions. I love Nvidia. Why? Because it remains an intellectual powerhouse run by the smartest person I've ever met, Jensen Huang. More than a decade ago, he traced out what could happen with accelerated computing and artificial intelligence. He knew he'd develop super fast chips that could do amazing things, including human-like inference and human-like learning. What I didn't realize when I first met Jensen was he was obsessed with the concept of speed. The speed you need to run cutting-edge video games since 1993 when he co-founded the company. At one point, Intel considered going against NVIDIA, but they weren't interested in the graphic cards business, staying focused on old-fashioned central processing units. Ultimately, graphic cards ended up having much more computing horsepower, to the point where they now do a heck of a lot more than graphics, and Intel, on the other hand, no.
Jim Cramer said recently that he still believes in Nvidia and thinks that investors who own Nvidia should hold the stock for the long term, but he expressed concerns over the fact that the rally may not continue. He said that while Nvidia is a great company with a great stock, in the end, it's still a stock. That means there are other inputs besides the fundamentals. He then added that for Nvidia to go higher, it needs fuel, but there's not enough money coming in to keep the rally going. This has been a concern for many Nvidia analysts and investors, but in my opinion, there's no reason why the AI-fueled rally won't continue. The global AI market could still expand at a compound annual growth rate of 37% from 2023 to 2030, according to Markets and Markets, and Nvidia could be the simplest way to profit from that secular boom. Additionally, Nvidia's first mover's advantage in the AI space gives it tremendous pricing power. Its top-tier H100 GPUs cost more than $40,000, and it can keep raising those prices to boost its gross margin. On his show, Cramer reviewed a few bullish takes on Nvidia, including a case for the stock from Melius analyst Ben Reitzes and an ultra-bullish view from technical analyst Dan Fitzpatrick, and acknowledged the positive arguments made by them about Nvidia's growth prospects in AI, gaming, and data centers. While not dismissing their optimism outright, Cramer seemed to express some skepticism about the most ambitious forecasts. He agrees Nvidia has strong tailwinds in key markets, but is not fully convinced the stock will soar quite as high as the most bullish predictions. Cramer appears to have a measured, realistic view of Nvidia compared to the vocal bulls. He recognizes Nvidia's strengths and growth potential, but also understands unforeseen obstacles can arise. But many other Wall Street analysts are way more bullish than him, so let's find out what they had to say. Hello everyone, and welcome back to Investocracy.
And we want to continue our conversation about the Fed, the several speakers, right? Some things that we've heard about. Neil Kashkari, for example. Seth Cohen's with us, Vice President, Executive Director for the Wealth Alliance, and wanted to get some of your thoughts on the big picture.
Hi, Nicole. Thank you for having me here today. Big thoughts. It's a Nvidia market at the moment. Right now, at least in the short run, it seems that we're trading on momentum and a lot of fear of missing out. We see a lot of this continue to be centered around these Mag 7 stocks that are there. And we just can't discount investor psychology at this time and the interest of them wanting to get into this market and continuing it. And that's where I think we are for right now at this moment in time.
I think there are people who probably had some FOMO and said, look, NVIDIA is doing so great. It's been amazing. I want to get in, but it's run up so much. And look, it ran up again and hit new highs today. So even if someone got in late, they still are making money. So what's to say that maybe some of these Magnificent Seven may be good plays for the next few years? I mean, year to date, NVIDIA is up 129%.
Yeah, well, rather than talk about for the next few years, I think the kind of market we're in right now is talking about a little bit shorter term. Although that being said, I think with the interest in artificial intelligence so great today and definitely a real thing in the market, we will see this broadening out, and we are seeing it broadening out to other stocks as well. As a matter of fact, any company that mentions the word NVIDIA or mentions artificial intelligence seems to go higher right now. I think we see NVIDIA, I don't know where we are at this moment in time, but right before I came on air, it was over 1,100, and I think we can easily go higher heading into the split that we're about to see. And I think there are people that want to continue getting into NVIDIA as well as getting into some of the other stocks. We've seen AMD as an example, who had a little bit of a scare last week, make up for more than that scare just today, has been doing very well and coming back strong. So I think this fear of missing out is definitely 100% true. What I'd like to see, though, a little bit is this getting a little bit, broadening a little bit more than from where we are at this particular time.
Stacy Rasgon, a semiconductor analyst at Bernstein, appeared on Closing Bell to discuss Nvidia. Rasgon stated that he is raising his price target on Nvidia stock due to the company's strong growth trends in areas like AI and data centers. Additionally, Mizuho's Jordan Klein said that these long and overweight institutional investors have a right to be so focused on Nvidia. He also said that the company is holding up the entire market and that the upcoming stock split will fuel retail investing activity, which will boost the entire market. Now, all of these analysts think that Nvidia stock is a buy, but why do they think so? This is the question that we're going to try and answer now, so you can determine for yourself if Nvidia stock is worth spending your hard-earned money on. But first, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
If the markets continue to hear higher for longer from a range of Fed speakers or from the lead actor, as you mentioned, then that can kind of sideline the effect to which the Fed has on the markets, and the markets perhaps hang their hat on something else. I mean, for a while it's been in Nvidia and the broader kind of thematic trade of AI. How long can that still be the case?
Well, the Nvidia trade can last a long time. I wrote a piece, that Nvidia is the Atlas holding up the market to some extent. And you know what? I can't get in the way of this stock. I can't think of a stock that has been so remarkably consistent at beating estimates, raising estimates, beating them again, raising them again, rinse, repeat. And this is, if I shudder to think what the markets would do if Nvidia stumbled. That's why I say it's sort of, of Atlas shrugs, so to speak. But that can overweigh it. The other thing to think about is we managed to go from pricing in 6 to 7 rate cuts to now 1 to 2 for this year. The reason we got away with this is it's because the economy is doing okay. Ultimately, the market's not really about the Fed. It's about earnings. It's about companies making money. It's about them being able to grow and return money to shareholders. All those nice things. And you know what? A rate cut is helpful. But really, what's the difference if the companies aren't making money? So be careful what you wish for. We don't want necessarily a weak economy that'll bring us rate cuts. I'm fine, and I've been saying this all year, I'm quite okay with having a strong economy that doesn't bring us rate cuts if it brings us earnings and cash flows.
Nvidia and the AI-powered rally showed little sign of slowing as the chipmaker recently hit an all-time high. Not only that, analysts expect Nvidia to post revenues of over $120 billion in the year 2025, which is over 11 times the $10.9 billion it posted in the fiscal year 2020. The company's profit growth has been even more stellar. It's expected to post net income of over $67 billion in the current fiscal year, which is almost 19 times its fiscal year 2020 earnings. So, Nvidia continues to fire on all cylinders with no slowdown in sight. Between pioneering advances in AI, owning the gaming chip space, and expanding into data centers, it seems the sky's the limit for this tech titan. Analysts can't help but fawn over Nvidia's prospects, even with the stock hovering near all-time highs. But with projected growth rates like 11 times revenue and nearly 20 times profit, it's hard to argue this growth story is anywhere close to over. Sure, some experts warn of potential stumbles, but the overriding sentiment is clear: Nvidia has its footprint on the future. So for investors seeking exposure to megatrends like AI, cloud computing, and the metaverse, it's hard to find a purer play than this AI-powered stock. At these valuations, Nvidia isn't cheap, but premium brands seldom are. For those with the patience and vision, Nvidia offers a first-class ticket to technology's cutting edge. The road ahead is paved with innovation, and Nvidia looks poised to lead the way. So we think that investors shouldn't wait any longer for buying and investing in Nvidia, and for those scanning the horizon for compelling opportunities, analysts shine a spotlight squarely on Nvidia. The company looks prepared with living proof, and only good seems to be coming. But what do you think about Nvidia stock? Is it a buy at the current price? Let us know your thoughts in the comment section, and don't forget to tell us what your valuation for Nvidia is. If you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. See you there.